Hi everyone, welcome to the Private Capital Investment Conference. We are here today at the ASX and I'm delighted to be joined by Chris Rolls, Managing Partner at PieLAB Capital. With over 30 years of experience in operating and investing in private companies, Chris brings a wealth of knowledge to the table. Chris, thanks for joining me.
Thanks for having me.
Now, Chris, you've had a remarkable journey over the past 3 decades navigating the complexities of private equity and venture capital. So can you share some key insights or lessons that you've learned along the way?
Sure. Look, I think if you look at the sort of the key lessons I've learned along the way, I think the first one is really learning and understanding the private markets before investing. It is different to investing in public markets or other asset classes. And I think, one of the things I see a lot is people, that have capital or come into a liquidity event and get their hands on some capital, often invest it in an unstructured way in private investments. And the research shows categorically that putting that capital with managers who invest it for them generates better returns at a much lower risk point. So that one I think would be the first observation. The second observation is understanding how the private equity model works. And what I mean by that is that if you invest in a private equity fund, it's not like investing in, say, the public market where you make an investment day one, and if you're putting $100,000 in, you put $100,000 in. If you're investing in private markets, it takes time to do transactions. You often have to commit money up front, and that money is called as investments are made. So you need to be good at managing the cash flow, your own cash flow to meet those calls on that capital that you've committed to a particular fund. So there's a few sort of interesting, learnings there. But, if you do get sort of your head around how the private markets work, the research is very clear, and that is that returns are better than all other asset classes.
Absolutely. Very insightful indeed, Chris. Now, without giving too much away, can you give us a high-level preview of some of the key points that you covered in your keynote session on excellence in acquisition and the unmatched performance of serial acquirers? This is for our audience members who weren't able to see the presentation yet.
Sure. So, look, when you're investing in private markets, there's a few areas that you can invest in. Most people are familiar with private equity. Most people are familiar with venture capital or even private real estate or private credit. A lot of people aren't familiar with the term serial acquirer, or often called acquisition-led compounders. And these are businesses that have a structure that are very similar to Warren Buffett's Berkshire Hathaway. So a permanent capital vehicle usually structures a company that go out and acquire small businesses. Now, we run Australia's first serial acquirer. So it's a model that is not common in Australia, but it is very common in Europe in particular. And one of the things I covered was just an example, a group of 30-odd serial acquirers, many of them publicly listed, whose median return over the last 10 years was over 20% per annum. And one of the advantages of investing in a serial acquirer is what you're doing is effectively buying a part of a company that invests in other small businesses. But rather than buying them, growing and selling them, we're buying them and holding them and operating them in a profitable way, generating cash over the long term. So over a period of time, that capital, that cash that generates, those businesses generate compounds, delivering very, very good returns, often similar or greater than the private equity industry. But the big difference is, unlike private equity, where you have to sell businesses and then reinvest that capital, which results in tax leakage, the serial acquirer model allows you to invest in a business that acquires small and medium businesses, and because it doesn't sell them, you're not paying capital gains tax along the way, and as a result, ending up 10, 20 years down the track with a worse return because of that tax leakage.
Yeah, absolutely. Now, from your decades of experience evaluating private companies as potential investments, can you share some of the key attributes or characteristics that you look for when assessing an acquisition target?
Yeah, sure. Look, we're very specific in the type of business that we acquire. So we acquire small recurring revenue businesses that are low in terms of capital intensity. And the reason behind that is we want them to generate cash. We want them to generate profits. But for those that are familiar with sort of accounting, just because a business is profitable doesn't mean that it generates a lot of cash. It may need to reinvest all their profits in capital improvements. So we typically buy recurring revenue, cash generating businesses, in that sort of the $2 to sort of $5 million of EBITDA range. And the reason we do that is we do that because those businesses can be bought at fairly low multiples, so attractive entry prices. And what that means is that unlike traditional private equity, we don't have to put a lot of debt into those businesses. So we put very small amounts of debt into those businesses because we're able to generate good cash returns out of those businesses without having to leverage them up with a lot of debt. So they're the sorts of things that we look for. But of course, the devil's in the detail. So when we're actually looking to acquire a business, we'll look at a whole range of factors in the business. For example, what has the business's historical pricing strategy been? Have they put prices up over the last 5 to 7 years? So we found a business about 2.5 years ago that hadn't had a price increase put in place in that business for 11 years. So we acquired it, we put the prices back up to market rates, and that business has generated us about a 26% cash on cash return per annum since we've owned it. Now they're very, very good returns, and the sort of returns you just don't get in the public markets, and you very, very rarely get when you're investing in sort of larger scale private equity type investments.
Mm-hmm. Absolutely. Well said, Chris. Now, in 2016, you founded PieLAB Capital, which has a focus on acquiring profitable businesses across sectors. So are there any particular industries or verticals that you find most attractive currently for the serial acquisition model?
Yes, certainly. We are sector agnostic. So we invest across a range of industries. But where we started was predominantly investing in businesses that provided products and services to the real estate industry. So if you look at our portfolio now, we like safe recurring revenue businesses. So often, a lot of our businesses provide services to the real estate sector. As an example, we own 2 businesses in the commercial fire safety, space. So they service, sprinkler systems in commercial buildings, emergency exit lights. Now that is compliance-led revenue. So it's sort of work that if you own a commercial building, you have to do it. And that makes the customer base and the revenue line very sticky. We have businesses in strata management. We have businesses in residential smoke alarm compliance. All of those sorts of things are services related to the property industry. Having said that, though, we also have businesses that are outside that. One of our best investments has been a business in the allied health space based in Western Australia, a business called Absolute Balance that we acquired about sort of 12 months ago. So we are sector agnostic, but as I said earlier, the key thing we're looking for are businesses that we can buy at a fair price. So we're not necessarily looking for the lowest possible price. We want a good business at a fair price, that we can operate for the very, very long term.
Now, given the potential challenges in the economic environment, how does your serial acquisition approach at PieLAB position your portfolio companies to weather the potential downturns?
Yeah, good question. And particularly in the current economic environment, obviously we've had, an environment of higher interest rates. And one of the things that is often, inflation, is often followed by, recessionary times. And I think, I was in Auckland last week and I think they are in a technical recession. So, what's important to us is longevity and stability. So when we're buying businesses, a couple of things we do. First of all, we buy businesses that have very stable revenue lines. So I talked earlier about acquiring businesses that have that provide legislatively required services. So commercial fire services, residential smoke alarm testing. Those are sorts of businesses where, irrespective of the economic climate, those services have to be performed by law. So very, very stable. The other thing we do is we're predominantly, in fact, when I say predominantly, we only buy businesses that are B2B. So we don't have any direct-to-consumer businesses. So the consumer spending is usually the first spending to be cut back when the cost of living goes up. And I think we're starting to see that in today's economic environment. So we avoid, B2C businesses. All of our businesses are B2B. You look at a business like Absolute Balance that I mentioned earlier. So it provides services to injured workers in Western Australia. A lot of them are out of the mining industry. And our customer is actually the insurance company. That is a pretty stable revenue source. It's historically been very stable over the long time. And that's something we look for across all of our businesses.
Amazing. Now, finally, Chris, it would be great if you could share with the audience how's your experience been being here today at the Private Capital Investment Conference. Any key takeaways or highlights that you'd like to share with us?
Sure. Well, it's only early in the day, but I've watched a couple of presentations, and every time I come to an event like this, one of the things I'm always surprised by is the range of opportunities. I've just watched a really interesting presentation that was in the mining services. I just watched Cameron from Pacific Equity Partners, his presentation of what they're doing, with a fund, that provides liquidity, which is one of the big issues in investing in private equity. So it's just always interesting, the broad spectrum of opportunities that you see at an event like this. And I think, the institutional investors for decades have been allocating more and more capital to private market investment. And I think what we're starting to see is more of the broader spectrum of the population starting to realize that that's where the returns are and that's where we need to be investing too.
Amazing. Well, Chris, it truly has been such a delightful conversation with you. Thank you for sharing your valuable insights with us today. And for our audience members, thank you for tuning in. We hope you found the interview as insightful as we did. I look forward to seeing you all in my next interview. Thank you, Chris.
Great. Thanks so much.